power players comes up for you. Let's discuss how the power sector itself will perform in the next year. Harshvardhan Dole, who's the Vice President Institutional Equities at IIFL, joining in now. Harshvardhan, thank you for joining in. The first half was good in the sense that we managed to navigate through coal availability and a lot of the other challenges. What is it that you're looking at in the first half of the second half of financial year 23? More importantly, calendar year 23 as well.
Hi, good morning. In the first half, the power demand was actually very strong. It grew at almost 11 to 12%. On a higher base, of course, the power demand will slow down in the second half. And we're forecasting on a full year basis, the growth to average anywhere between 6 and 7%. Now, relative to the working capital which is available within the system and all the constraints which are well known, I think we are well geared to meet this particular power demand. That, in my opinion, is a great thing. The system seems to be, well geared to meet up, the demand patterns which are lined up over the next maybe 6 to 8 months. And we'll have to take a call on quite a few other things as the second half of the calendar year maybe pans out. So I'm not as pessimist as maybe as I was, say, 12 to 18 months ago, as I am right now, when I'm looking at next maybe second half or so.
Okay. Always good to be an optimist, right? Let's talk about individual stocks then, Harsh. The power performer of the year, power packed performance of the year has come in from NTPC. It's a 31% rally that we've seen. What are the triggers that could further sort of exacerbate that gain for it? And what do you see as, what's your target price on NTPC now?
So NTPC actually is our top pick. And the reason is very simple. On a consistent basis, NTPC will add about 6 to 7,000 megawatt of capacity each year for the next maybe 5 to 6 years. The capacity addition could actually could be much higher if the government addresses the key issues which are plaguing the renewable sector. And if the financial health of the states kind of improve, the coal-based capacity additions could actually also fast track. So we are forecasting close to about 10 to 12% base case earnings growth for NTPC for the next few years. And then relative to the cash flows, the dividend yield, the stock is kind of very cheap, close to one-time book and a dividend yield of 6% plus. I think the payoffs are asymmetrical. We continue to like that name. And the key trigger to look out is basically the value unlocking, which is lined up from the renewable subsidiary. If a strategic investor is inducted in that entity, I think there's significant gains for the minority shareholders. So we continue to be upbeat and bullish on NTPC, regardless of the massive outperformance last year.
So this value unlocking you're talking about is that 20% stake that they're planning to sell in the green energy business, right? That's valued at almost 3,000 crores, I think. Is that it, or is there anything else that you're looking at as well?
See, I think you're right. The 20%, up to 20% stake is what the company might end up selling. We'll have to see what exactly the valuation pans out to be, but that will be one of the key triggers.
No, just hang in there. We'll quickly take the 9-10 technical trades and come back to you. Sudarshan, what's your 9-10 call? We also have Mitesh with us, but first, Sudarshan.
Well, for intraday trading, consider buying the Nifty using intraday tools. Alchem Labs is a buy with a stop under 3,000.
And Mitesh, what about you?
I will go with a long call on Britannia. It's come down to support levels. So keep a stop below 4,300. Look for a first target of 4,400.
All right.
We'll go back to Harshvardhan. Harshvardhan, you said that, there would be some unlocking in NTPC's renewable arm, etc. That could be one of the triggers. But 2022 was also important in the sense that we did see the return of the non-renewable, so to say, earlier ESG affected stocks. So do you think that's a theme that will play out in the next year as well? Are you looking at any of the renewable names as your top picks, or maybe you are sticking with the older traditional power players?
See, I think what excites us is the cash flow and sustainability of cash flow and return ratios. So whether it comes from renewable or traditional really doesn't matter. But if I were to look at the spectrum of companies which are getting into renewables, there is a stress on cash flows, there is a stress on return ratios, and therefore we are slightly cautious on the overall renewable space. And we'll try and revisit the whole space once these systemic issues are addressed. But for example, the opportunity landscape is significant, but the capital costs have gone through the roof. And a lot of these companies are trying to commit themselves to a fixed tariff for a protracted period in time.
Got it.
I'm really not sure how this overall math will look at, and rather to be cautious than to be aggressive on the whole space.
Harshvardhan, it's a pleasure. Thank you very much for your time. Great speaking with you. There's 3 minutes to go for the market opening. So let's just take a look at